If you are getting a tax refund this year, you are likely checking your bank account each morning to see if it's been deposited. Before that money arrives, Leslie Tane, a debt relief attorney, says have a plan. Look at your budget and decide if you want to use that extra cash to pay down high interest debt or even just get ahead on some of your bills.
Some people can consider paying an extra payment to their mortgage or other outstanding loans, which will reduce significantly the actual interest you ultimately pay on those loans. In addition, you can still put your money into a high interest CD or savings account.
Tane says even though interest rates are coming down, some of the interest rates on savings accounts are still pretty substantial, enough that you could earn a nice income off that money that you leave there. You could also use the money to create an emergency savings account in case your car breaks down or there's an unexpected medical bill.
Another option with your tax refund is a donation. You could donate to a local charity or a charity of your favorite kind, and that in the end will be a tax write-off for you the following year on your tax return. And of course, it's giving back to the community.
Tane says this is something to consider if you don't need the money right away or it's a windfall of money coming in that you didn't expect and you're feeling charitable and looking for a tax write-off the following year. With this Watching Your Wallet, I'm Rachel DePompa.
Before you hand anyone your tax info, the Better Business Bureau says beware of scammers looking to get a grip on your documents and money.
A lot of times we'll get reports to our scam tracker about people receiving phone calls or emails or text messages from someone claiming to be the IRS, saying that they owe taxes, to click on a link or to pay them over the phone. And we know that's not how the IRS conducts business.
Melanie McGovern with the BBB says remember that the IRS does not call, text, or email you demanding money. And if a business claims they'll make all your IRS problems go away, do your research before you even consider giving them a call.
Anytime you hear an advertisement that claims to do something and you think to yourself, oh, that'd be great, but is this real? You want to check them out with BBB.
McGovern also recommends not procrastinating so someone doesn't file under your name first and steal your refund.
We always encourage people to get your taxes done early. Then you can avoid tax scams and any kind of identity fraud, especially if you're scrambling at the last minute. You may be a little bit more vulnerable. You may click on a link that isn't right. You may fall for a phishing scam in your email.
If you think you've experienced tax identity theft, contact the IRS and also file a complaint with the Federal Trade Commission. The FTC also offers a personalized identity theft recovery plan. With this Watching Your Wallet, I'm Caresse Jackman.
Despite 70% of Americans qualifying to file their federal income taxes for free, less than 1.9% actually did in 2023, according to a new report from NerdWallet.
I think the shortfall is due to several factors. Number one, I think it's a lack of awareness, but I also think people are inundated by the number of options available to them right now. Also, understanding qualification standards for programs like this can be complicated and difficult.
To know if you qualify for free file, your adjusted gross income must be $84,000 or less. The IRS changes those income qualifications each year, and different private tax software providers within the program may have additional standards as well. Elizabeth Renter, a data analyst for NerdWallet, says also, if you Google how can I file my federal taxes for free, you might end up on a software provider website that isn't connected with the free services offered by the IRS.
One thing that is different this year is the direct file program. So last year, the direct file program was a pilot program. It was offered on a very limited basis. This year, it's expanded to 25 states who allow people to bypass the middleman. So they're not using a private tax software provider and instead are using software provided by the IRS.
To find your free filing options, go to the IRS website. It's irs.gov/free file. From there, you'll click on Use Free Guided Tax Preparation. This site will walk you through choosing a provider that is part of the Free File Alliance. They'll ask you questions about your age, your location, and these free file programs will steer you into a provider which ensures you will not pay to create your federal tax return if you qualify. With this Watching Your Wallet, I'm Rachel DePompa. The fact that 49% of Americans told Wallet Hub they are relying on this tax refund to help them pay bills is a worrisome statistic for many experts.
You should really view a tax refund as something that's kind of like a nice surprise, maybe something you use to boost your savings or an emergency fund, or something maybe you take a vacation without having to go into debt, which a lot of people kind of use to vacation. It shouldn't be something that you must have.
John Kiernan with Wallet Hub says when you get a tax refund, it's really an indication you paid the government too much in taxes, and it's basically you giving the government an interest-free loan. He says if you really need the money now, it might help to adjust your withholding so you don't get a big refund at the end of the year, and instead you get more money in each paycheck. And what if you're not getting a refund and you owe the government money?
The biggest piece of advice I have is to file no matter what. A lot of people think that if they don't have enough money to pay their complete tax bill, they should just wait. That's a big mistake because the IRS charges two different fees around filing without a payment and not filing at all.
Kiernan says the failure to file fee is a lot higher than the fee for not paying the full amount by tax day. He says your options when you do file this way depend on how much time you need to pay the money, whether it's 30 extra days or an extra 6 months to pay. And if you live in a FEMA designated disaster area from, say, the North Carolina hurricane or the California wildfires, your federal tax deadline is actually extended until October. With this Watching Your Wallet, I'm Rachel DePompa. It's nice to find out you have extra money coming your way. So before you spend that tax refund, Cherry Dale, the Vice President of Financial Education at the Virginia Credit Union, says pay yourself first. She says that means building your savings, especially that emergency fund. Just using 10% of your tax return to build up that fund is an excellent way to get ahead. She says the second way to use this money is to pay off outstanding debt.
Perhaps it's left over from the holidays or a vacation last year. So take a percentage of it and put it toward that debt. Look and pull your medical bills as well. If you've had medical expenses the last year, take a look and see how much you can contribute toward that.
Dale says it's also great to take some of your tax return and fund or invest in your retirement accounts so you can think about your money making money for you in the long run. Dale says you can also use your extra cash to have a little fun.
You don't have to contribute everything of your tax refund to your vacation, but perhaps 20%, 30%. You can start creating that vacation fund and then tackle how much you need to be saving until your vacation actually comes about. And that way you are ready to go once vacation time hits.
Dale says it's also okay to splurge a little bit with that tax refund. Remove the guilt. She says take 10% of that money and do something fun for yourself. With this Watching Your Wallet, I'm Rachel DePompa.
The value of Bitcoin recently reached an all-time high, prompting many investors to take their first plunge into the cryptocurrency market.
What is a crypto ATM?
So a crypto ATM looks exactly like a regular ATM. Right now, there's about 40,000 of these machines across the United States. So they are everywhere.
With the rally, Bitcoin ATMs are becoming increasingly common, popping up in gas stations and grocery stores across the country. While the machines offer a legitimate and easy way to buy cryptocurrency, the AARP is warning that scammers are exploiting these ATMs to steal money from unsuspecting users. Amy Novziger says scammers will often pose as law enforcement or a government office and pressure the victim to withdraw money from their bank and deposit it into their nearest Bitcoin ATM. They will then instantly convert it to Bitcoin and send it to a cryptocurrency wallet, making it unrecoverable.
Additionally, criminals love these machines because there's not much oversight over them. There's no interaction with a human needed, so no one's there to provide friction for the victim. And then you can send high dollar amounts through these machines very quickly. I had a victim one time that sent $80,000 in cash through one of these machines that then was converted into crypto and sent to the criminal.
Knopfsinger says bottom line, if someone tells you to pay a bill using crypto ATM or directs you to deposit cash in any ATM, don't do it. It's 100% a scam. With this Watching Your Wallet, I'm Caresse Jackman.
Bankrate found 1 in 4 Americans would rely on a credit card to pay for unexpected expenses. That's because just 41% said in a survey they could pay for a $1,000 emergency from their savings. Mark Hamrick with Bankrate says this is down from last year and interrupts 3 years of progress. And he says inflation is likely the biggest reason why.
Americans have had to focus on paying for some of the things that they need rather than the things they want. Many are still spending on the things they want as well, perhaps to some degree to the peril of their financial situation.
Hamrick says we all need to prioritize building up an emergency fund so we can avoid putting things on credit cards. He says write down all the money you have coming in and going out each month and see if you have anything you can set aside.
The mechanism by which to do this is to have a separate emergency savings fund, ideally in a high-yield savings account that's paying on an annual basis 4% or better. It has to be highly liquid.
He says you want to link this account to your traditional checking account if you are able. Automate those savings so you don't have to think about it. If you can make those automatic deposits once a month, he says you can build up $1,000 in no time, especially if you make it a goal. With this Watching Your Wallet, I'm Rachel DePompa. Homeowners spent $472 billion on home renovations in the third quarter of last year, and that spending is projected to increase in 2025. Almost half of all homeowners will take on renovation projects in the spring or summer. Abby Drexler is an analyst with This Old House research team. She looked at data from the Joint Center for Housing Studies and the National Association of Realtors to find out the biggest home trends going into 2025. Drexler says kitchens and bathrooms are still the most common target areas for homeowners, and improving your flooring, meaning adding hardwood floors, is another common project people are undertaking. Adding wallpaper or painting walls was also in the top 3 list of projects for 2025. She says you need to make a list of projects for yourself that you want to tackle and then prioritize the most important.
It might be nice to have a fresh paint, but is that as important as if your roof needs to be repaired, right? Or if you need more insulation. So I think it just kind of been focusing on what matters most, and that can help go through your dollar a little bit more, how to prioritize your dollar if you only have, enough for certain upgrades.
30% of people she surveyed plan to use credit cards to pay for these projects. She says be careful going into debt, and if possible, try to save up some money for a project. And as you're budgeting for a renovation, factor in a 20% cushion if possible, because renovations rarely stick to the original budget. With this Watching Your Wallet, I'm Rachel DePompa.
Every day, millions of people browse sites like Reddit looking for deals on products. But John Kiernan, managing editor for Wallet Hub, warns that not every recommendation is trustworthy, and you may end up spending more money than intended.
People are going to Reddit expecting honest, unbiased recommendations, and they're getting spam without realizing it.
Kiernan calls these posts marketing spam, when a user recommends a product but stands to profit if someone makes a purchase through their link.
They go and post a normal comment to get it approved by moderators, and they go back and edit it and add links in it.
Kiernan showed us how these posters make money from what you buy.
So if someone buys this $678 standing desk on Amazon, the person who posted the link on Reddit is going to get a chunk of it.
And people don't know this? I mean, obviously the person posting it knows this, but many people don't know that a part of it is going to that.
They definitely don't, and that's why they're recommending these specific products.
So how can you spot this type of spam? Kiernan says a closer look at the URL can be a red flag.
That's kind of a sign that it's an affiliate link and is maybe a little bit less trustworthy. I would also recommend checking out the people's profiles on these sites. If you see they aren't very active, or they're always responding at the same time or with the same type of comment.
And if you're interested in a product, Kiernan recommends searching for it separately instead of clicking on the link in the post.
Bank of America is unveiling family banking across the country, and we wanted to know a little more about how it works. So I caught up with the president of retail banking for Bank of America, Holly O'Neill. She says parents can soon set up bank accounts for their children under the age of 16 online or through the mobile app. You control the accounts, set the limits and the alerts, and your kids cannot overdraft.
Less than half of kids when they go to college feel prepared, but parents feel responsible to make sure they're set up for success. So the combination of the two, getting to them earlier and giving parents a partnership and a hands-on approach with family banking really were the drivers of our design.
O'Neill says the point is to teach kids early how to budget. You can make it fun, set the rules, and they learn the value of money, especially how to save it.
From a parent vantage point, it allows you to put some parental controls in and alerts so that you can surveil what they're doing. And again, it can be a real-time learning experience for your child.
Most kids only see their parents with cards in their hands, not dollars. O'Neill says teaching kids how to manage a debit card early on is a key life lesson. Bank of America launched family banking in the fall in select states and plans to roll it out across the country over the next few months. With this Watching Your Wallet, I'm Rachel DePompa. We clean our house this time of year. Why not clean up our budgets? Leslie Tane, a debt relief attorney, says first look at your expenses over the next several months, map it out, and then plan for the unexpected as well. That means building up an emergency fund for unexpected home or vehicle repairs.
It is the perfect time to just sweep through all of your accounts and take a look at not only your bank statements, your credit card bills, all outstanding debts that you have, and look to see the best possible ways of meeting your expectations that maybe you've set from the new year or your overall financial goals.
Tane says go over all your subscription fees. They can really add up and you may not realize how much you're paying. Go over your credit card bills and see what you're spending a lot of money on each month and look for where you could make a small change to cut back.
Remember, with budgeting and finances, there's always room for either improvement or adjustments. It should be super fluid, meaning that it shouldn't be so hard and set in stone that you can't make those adjustments and move around should something change, whether it's an increase or decrease in income or unexpected expenses.
And she says, remember, there are also changes that are beyond your control. Interest rates could go up or down, same with taxes and even changes in your income. This is just a great time of year to see if you are on track and what you need to do to make adjustments so you can reach your goals for the rest of the year. With this Watching Your Wallet, I'm Rachel DePompa. If you're starting the new year with a goal of saving for retirement, then we have a little Investing 101 refresher for you. Gloria Garcia Cisneros, a wealth manager at Lord Murray, says there are two basic kinds of accounts, investment accounts and retirement accounts. When it comes to retirement accounts, she says those are for the long term. We're talking about 401ks, 403bs, and 457s.
There are also individual retirement accounts. You'll hear IRAs a lot, but these are really dedicated for longer time horizons and they have tax advantages. So the government wants to encourage you to save and you don't have to pay any taxes that whole time while the money's growing.
There are some limits for how much you can put into these accounts, and there are requirements when you're in your 70s to take money out of them. The other type of accounts you need to know about are taxable accounts or investment accounts. Cisneros says these accounts are more flexible and good for midterm goals, not long-term investments.
So there are no contribution limits, so you can put in as much as you want. However, you don't get the benefit of tax-free growth on the money. So any given year, depending if you sell investments or how much income you got from them, you will pay taxes.
Cisneros says whichever accounts you choose to use, or if you use both, It all depends on your savings goals. A financial advisor is a good person to talk to about your specific situation. And Cisneros says being proactive and saving for your future is key, but so is setting aside money for an emergency fund and paying off credit card debt. With this Watching Your Wallet, I'm Rachel DePompa.
Investment scams are on the rise, according to a report by the BBB.
The most interesting aspect of an investment scam is how it kind of ties a lot of different scams together for the end game of getting your money.
McGovern says fraudsters will often impersonate a friend or a potential lover in order to gain your trust. Then they'll bring up some kind of investment opportunity. One woman, for example, told the BBB she experienced a cryptocurrency scam on social media after her friend's social media account was hacked.
And the more they get you on that emotional hook of either friendship or romantic interest, the more likely we see that people will fall for it and start to give money.
McGovern says the scammer will often show you fake returns on your investment, so you're more likely to give more money. These newer schemes have caused losses to rise, with the median reports increasing from 1,000 in 2021 to almost 6,000 in 2024. To avoid these scams, McGovern says learn how the industry works before you invest.
Educating yourself about investments, working with an accredited licensed professional on investments, not just somebody you meet through a social media platform or a dating app, but actually finding somebody who can explain it to you.
So be aware of what you're investing and where before you give anyone your hard-earned money. With this Watching Your Wallet, I'm Caresse Jackman.